In this video, I'm going to talk about how to find strong stocks. So, most traders focus on finding cheap stocks. I focus on finding the strong stocks. Have you ever looked at a stock and thought, what is going on? Is this a good stock? Or did some guy on TikTok just tell me to buy this and I'm taking his word for it? That is the question that everybody has when they first start looking at the stock market. What actually makes a strong stock? What actually makes a stock weak? Because when I first started trading, I had absolutely no idea what I was looking at either. But over time, I learned that strong stocks leave clues, and once you understand what to look for, trading becomes so much less random. In this video, I'm going to break down exactly how I find and identify strong stocks and what I personally look for before entering a trade so that you don't have to blindly chase random stock tickers. First off, why strong stocks matter. Why do we even focus on strong stocks? Because strong stocks tend to stay strong. For example, if you look at this stock, AXTI, it clearly looks strong, right? Well, maybe. What makes it strong? How do I know it's not going to go up or down? If you just look at it, so in the back, it was all the way down here back in April of 2025, and since then it has been going up, up, up. And that's what you look for. You don't want to look for stocks like this, PHGE, where they keep going down, 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 down. Now, if you zoom in to PHGE, you'll see, oh, it's going up. Yeah, here we go. Bam. Well, yes, it's going up today, except if you look back a little bit, it went up on February 10th. It made a big, well, 47% move up. And then what did it do? It went down. And then it did it again. And then it went down and down and down and down. And now, back in February, it was $5.69. Now, it's $1. Yeah, you can buy a lot of stocks, a lot of PHGE for $1. And if it makes a big move, you can make a lot of money. However, you could have also bought a lot of the stock at $5. So why strong stocks matter? Because strong stocks tend to stay strong and weak stocks tend to stay weak. This weak stock, it's staying weak. It just keeps going down and down and down. AXTI just keeps going up and up and up. That's what you want to look for. Strong stocks that keep going up. Yeah, zoom into AXTI, it has a red day, goes down, goes down, goes down. That's all part of the process. Stocks don't go straight up, they go up in a stair-step pattern. Of course, there's always exceptions. You can have a strong stock that turns weak, and then you can have a weak stock that turns strong. For instance, Wolf. All right, this stock is strong now. However, if you look back here, it was weak. It was weak all the way from, let's say, 2023 all the way down to 2025, end of 2025. And then it started making some good moves up, 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 up. And this is when they start to prove themselves. So there are turnarounds, but you don't want to hope that a stock's going to turn around. You want to watch. You want the stock to prove itself first. Hope is not a strategy. It's not a system. That's just gambling. If you would have bought this at 90 cents, I would have told you you're crazy. Why would you do that? You would have been right, but you would have been right on this one. And if you're doing it on this one, all the other ones, PHGE, probably not going to be right. Eventually it'll bite you. So now, why do stocks tend to stay strong? So one of the biggest reasons that strong stocks continue to move higher is institutional buying. When a large hedge fund or institutions buy into a stock, they don't buy millions of dollars instantly. They do it by building positions over days and weeks and even sometimes months. So AXTI, another perfect example, is institutional buying. You see it make this big move up, and then it goes down, and then a big move up, and then sideways, and then a big move up, and then sideways. This is where the volume days come in. You see a lot of money flow into these stocks on these days. That's your sign that you're getting institutional buy-ins. Large hedge funds are buying a lot of these stocks on these days and then let it settle, and then they buy again, let it settle, buy again, let it settle, buy again. That's that's your stair-step pattern. So like I was saying earlier, stocks don't go straight up. They go up, then they go sideways, then they go up, then they go sideways, then they go up, then they go sideways in a stair-step pattern. Um, and then there's a little bit of pullback in there sometimes, but that's how it works. That's how you get sustained momentum. And our job as traders or investors is not to fight the market. You don't want to look and say, oh, I think PHGE is jumping up today. Let's go buy some. And then it goes right back down. No, no, no. Don't do that. Stick with the stocks that the hedge funds are buying, the institutional buyers are going in, that's going to go up. If you would have bought this any time, here, 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 you would have made money. Why? Because they go up. However, if you see PHG, you had to buy it here, and then on this what day? What is it? January 21st. You you see a lot. It opened here, it made a big move up, and then it came right crashing back down. And then the next day, it came even lower, and then the next week, even lower and lower. That makes trading so much more difficult. Stay away from the stocks that spike and then come right back down. Those are weak stocks. They have strong moves in a day or two, but they're weak overall. Don't do that. Stick with the strong stocks that'll go up, sideways, spike up, sideways, spike up, sideways. That's the job. We want it when we buy stocks, we want to buy the stocks that are strong because they'll outperform all your weak stocks. And then why do we do that? Like I was saying, it's cleaner moves. Your trends are easier to see. Um, they respect the support levels and they have strong breakouts. Weak stocks, they'll spike and then they'll drop right back down. Strong stocks, they'll go up and they'll keep going up. But the weak stocks, what'll happen is you'll buy it, it'll spike up, and then it'll drop back down. Now you're trapped in there. You have a lot of money in the stock and it's going redder and redder, but you're afraid to sell because what if it turns around? Well, chances are it's not going to turn around. It's just going to keep getting worse and worse and worse. However, with strong stocks that are going up and up and up, you can buy it anytime you want as long as it stays strong. So, what exactly I look for? I've been talking about strong stocks, but let's get down to the technical side of it. Personally, I use 4 different indicators and I try to keep it very simple. I use the 10 SMA, the 20 SMA, the 50 SMA, and then the 200 SMA. If you don't know what an SMA, it stands for a simple moving average, and it's the average of a set number of periods. So, for instance, the 10 SMA on the daily chart is the average of the last 10 daily prices, and it creates a line. The same thing with the 20. It's the average of the last 20 periods, which is the 20 daily prices for that time frame. So, for instance, here, the 10 today on AXDI, the S10 SMA is 119.31. So that's the average of the last 10 periods. The same thing with the 20. It's 106.07. It's the average of the last 20 periods. Now, why do I use these? Well, they're very simple to read. They show you a lot of information, and it's a good way to identify strong stocks. So, What is a strong stock? If you look at this stock, you'll see that AXTI is above your 20 or your 200 SMA, it's above your 50, it's above your 20, and it's above your 10. Most strong, really strong stocks kind of hug the 10 SMA. And you want a strong stock to move up with your 10 SMA, kind of pull back around it, and then move back up, and then pull back, and then move up. If it's breaking away from that 10 SMA, that's a really good sign. You will also want them to be above the 200 and above the 50. Ideally, all of these averages are in line. So the 200's on the bottom, the 50's on the middle, the 200 or the 20's the next, and then the 10's the top. And you want it to hug that 10. So let's go look at PHGE. You see this? 10, 20, 50, and 200. They're all in line, but they're the wrong order. You don't want them you don't want any stocks that are below the 200. That is a big sign of a weak stock. You don't want them below the 50. If they're below the 20 and 10, that's questionable. They're probably they could still be good as long as they're above the 20 and or the 200 and the 50. But this thing has been trending below that 200 SMA for a very long time. And that is the exact opposite of what you want to see. This is a weak stock. Fly. Fly doesn't even have a 200 yet. It hasn't had 200 daily periods. So this one is kind of questionable. It's been trended down, went up, trended down a little bit, went up. At this point, it's a little too early to tell. It could be strong. It's looking like it wants to be strong. If you see here, it's got the 10, the 20, and the 50 all aligned. So I would keep my eyes on Fly because it looks like it wants to be a strong stock. ARM, another good sign. ARM was trending sideways. It was trending sideways. If you see, you had things go below the 200 and then above the 200, below the 200, above the 200. However, if you zoom in, the past month or so, beginning of April, it kind of made a big move. It made a really big move initially, and then it pulled back, and then now it made a even huger move. This is what you want to see. Stocks, if you're going to swing trade this, you would not have bought this here. You could have, but really you shouldn't have because it hasn't proved itself yet. So until now, it's just kind of noise, 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 noise. This move here is its initial proof. It's like, okay, this wants to be good. And then it makes a good pullback, consolidates for a while, and then moves up even higher. This is what you want to see. This move right here, up, pull back, and then higher. So that's what you want to look for. Like I said, stair-step pattern. Up, big move up, consolidate, and even bigger move up. You want to see these things make higher lows and lower highs. So what does that mean? Let's go look at AXTI. Yeah, let's keep a look here. So ARM, you see how this thing's kind of tightening up, tightening up? That is exactly what you want to see. That's building a great structure, and then breakout day. It tried to break out here, but this is really your big breakout day. It moved from, what is this, open at 226.5 to 261.9, 259. Yeah, that's a big move. And then it made an even bigger move the next day. Strong stocks, they keep following through. That's your sign. All right, so like I said, watch those daily averages, watch for strong stocks. Don't buy your cheap stocks, buy your strong ones that are moving up and up and up. They should be above the 200 at least, and then ideally it has the 200, the 50, the 20, and the 10 all in line, and then the strong stocks will hug the 10 and then break off that 10. When they break off the 10, that's your sign that this is your breakout day and it's a good good stock or good time to buy the stock because it's going to make a big move up. If you want my exact scanner layout, there's a link in the description. You can pick that up so that you get this exact layout with the daily chart on the left, the hourly chart and the minute chart on the right with all your averages aligned and my scanner set up on the left. Also, in my next video, I will show you exactly how I go through and build a watch list for swing trading. Thanks.